I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong. On the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
Tom Lee highlighted the stock market's resilience in 2024 with $7 trillion in sidelined cash and a strong outlook for 2025. He noted a pro-market White House and second-term presidency as catalysts for continued growth, urging investors to adopt a risk-on approach. Experts discussed the competition between Nvidia and Broadcom, with Broadcom gaining momentum through custom AI chips and networking solutions for hyperscalers like Meta. While Nvidia remains a leader in GPUs, Broadcom's diversification positions it as a strong contender in the AI market. Investors are advised to diversify globally, with companies like TSMC playing a key role in the AI ecosystem. Though AI stocks show promise, caution is needed due to potential volatility, favoring a balanced investment strategy across sectors.
We're looking at chips today, really focusing in on shares of Nvidia, that hitting a sluggish run, stock falling. It's now down more than 10% from its record close last month. You want to know when its record close was? The day of its record close? It happened to be Election Day. And since Election Day, Nvidia is down. It's in fact now down well more than 10%. It's getting closer to 11-12%. The rest of the Magnificent Seven, all of them have been higher. So if you look at that ETF that tracks the Mag 7, it's up. If you look at each of them, especially Tesla, which has far and away been the winner, they're all up. Nvidia is one of these things is not like the other situation.
And we spoke recently to Nancy Tengler, who a very smart investment strategist and Nvidia bull, and I was asking her about this and what sort of she thought explained that, and I bounced one idea off her, which is, could it be in part that there's a product transition occurring at Nvidia? Could that help explain some of the weakness? And Nancy basically just told us that she just thinks the market has a short-term memory. She actually told us she was using this weakness to add to their position over there. Because I think her bottom line to us was, Julie, she looks at Gen AI spending and it's still going very strong. And her bet, like a lot of folks, is if that's true, then Jensen Huang is a beneficiary.
Well, the sort of new hotness over the past few days in the market has been Broadcom. In contrast to Nvidia, it was up 24% on Friday following its earnings. It's up again today by double digits. And yes, the reception to Broadcom's numbers was impressive from analysts. However, what's interesting is if you look at the outlook for next year, you look at a Stacy Rasgon from Bernstein, you look at a Vivek Arya from Bank of America, they like both stocks going into 2025, both Nvidia and Broadcom. I had a chat on the phone today with John Vinn over at KeyBank, and he said there seems to be this view now that people had been waiting for the custom silicon wave to come. In other words, the hyperscalers, other companies start to design and have their own custom chips. And Broadcom is seen as a main beneficiary of that, particularly following its report. He happens to think that it's premature, that we're seeing this real shift in the market, but that is a shift people have been waiting for.
Yeah, in terms of just showing the love for Hock Tan's company, per Bloomberg data, all in, 25 analysts have now raised price targets by an average of 19%. No analyst cut price targets on Broadcom. No analyst downgraded. 12-month target is around 232 now.
Yeah, and what's so remarkable about that? That company matched estimates with its earnings. It was all about the commentary around AI, around the total addressable market for these custom chips that we're talking about, and what that is going to lend to Broadcom in the future. But it also gave a big range. It said maybe that AI market could be between $60 to $90 billion by fiscal year 2027. 60 to 90 is a pretty big swing.
You had mentioned Stacy Rasgon, who took his target to 250.
Yeah.
And Stacy kind of told his clients, for him, he looked at Broadcom and said, bottom line, the AI story there just seemed to be kind of really coming together for Hock Tan. And a lot of people obviously agreed with him.
Yes.
We're going to start off with a look at shares of Nvidia, which are down roughly about 0.5% right now. The chipmaker was, though, named a top pick by Bank of America for 2025 as analysts see deployments of Nvidia's new Blackwell chip to drive momentum in that entire space. But uncertainties around Blackwell's timing and softness in Nvidia's gaming segment are weighing on some investor sentiment there. So Nvidia shares a monster year, but down 0.5% this morning.
Arjun, what's going on? Why are we seeing such weakness in Nvidia and Broadcom really gaining so much strength?
Unpack this and start off with a couple of stats. In the latest quarter, Broadcom's revenue was just over $14 billion, up 51% year on year. Nvidia, meanwhile, posted just over $35 billion in revenue, up 94% year on year. Broadcom trades at a higher forward PE than Nvidia, yet Broadcom is getting all of this backing from investors right now. There's a sense, I think, that investors are looking for the next Nvidia, the company that's going to give them the outside returns riding this AI wave. So you're seeing some of that rotation happen there. But it's important to know also that Broadcom and Nvidia are not necessarily an apples to apples comparison. Nvidia develops GPUs, these graphics processing units that have been used to train huge AI models like those made by OpenAI. There is still no real challenger here in this space. Meanwhile, Broadcom's focus really has been on designing custom AI chips for hyperscalers, the big cloud players like Google, Amazon, or Microsoft. And while these hyperscalers still need Nvidia chips, they're increasingly looking towards some of this custom silicon that Broadcom's designing that can be used for certain tasks or processes. These hyperscalers then sell those services through their cloud division. Now, one reason the market is excited is because of recent comments by the Broadcom CEO, Hock Tan, who said 3 hyperscale customers have developed their own AI chips on Broadcom's own platform that will be deployed over the next 3 years. And the company has received also a round of price target increases from Wall Street. All of that right now helping Broadcom's recent rally to over $1 trillion, Frank.
For more, let's bring in Tom Hancock. He's GMO's U.S. Quality ETF Portfolio Manager. Tom, are you wading into the whole chip thing here? Is it broad? Now Marvell's the hot new thing. Where are you at for next year?
Yeah, well, we like a lot of these companies from a quality of business point of view. I think if you're asking me Broadcom versus Nvidia, we would come down on the side of Broadcom here in terms of potential opportunity. One of the reasons why Broadcom is gaining some ground on Nvidia is they are winning on the networking side. As you scale up the number of GPUs in a data center, it becomes an N squared versus N problem to connect them all together. And that's where Broadcom and to a lesser extent Marvell play. And also Broadcom is strong in the custom chips. So for the big hyperscalers like Meta, and Alphabet coming up with the chips that they need to do their specific workloads, we see that as being a much more proven commercializable use case and one that's gaining a little bit of share. So Nvidia is a great company, but I think Broadcom has a little bit of more tailwinds behind it. And that's setting aside some of its businesses outside of AI that are a little bit of in a cyclical trough that we think can rebound next year.
You say, Tom, that the NASDAQ has turned into an AI index. Is that a compliment or an insult?
Well, time will tell, I suppose. But what that's saying is it's become not really an index. It's become a single bet. So it's a very risky thing to invest in. It's not what I think you would want from a sort of diversified investor. It's probably going to give you more volatile returns next year, and I'd a little bit worry that the AI rally has extended itself, so those may be uncomfortably volatile returns.
But maybe I feel a little bit more comfortable in investing in a broad AI index when I can see this leadership churn. Maybe the leadership is transitioning from Nvidia to Broadcom, to whatever the next iteration will look like. Isn't that better than if this bet only had 2 companies, and if the thing doesn't work out, well, then we're all, forget it. But if it's maturing, and if it's now potentially going to offer a lot of different companies customizability, plays out across the software space, don't you want exposure to like the most innovative, fastest growing part of the broad market and economy?
Oh, you absolutely do. And I think you shouldn't just own Broadcom or just own Nvidia. And I think for AI, it's great to play it through some of the more downstream companies, or even a company like Apple that, of course, is a big weight in the NASDAQ. But I also think you should pay attention to some of the old economy stocks out there. I think you should pay attention to investing outside the U.S., for that matter, areas that have lagged, but where there's still, we'd say, long-term pretty good growth. And AI, because it's become such a, hype trade at this point, not to say that's not real, but any little hiccup in the economy and these stocks can fall pretty hard.
Although if Taiwan Semi is the example of investing outside the U.S., we're kind of right back where we started from in terms of themes.
Yeah. Well, it's certainly, I said, you want to invest in AI, and TSMC is a great way to do it. They make all of Nvidia's AI chips. They make all of Broadcom's AI chips. The broad end of the funnel all goes down through TSMC, and even more so now that Intel is falling behind and had to have their CEO changed. So they're perhaps the most essential company in the world. That's one of the reasons to invest outside the U.S. It's not just diversification. You get great businesses like TSMC out there. But on the other hand, TSMC is not, all there is out there too. And so if you want to diversify outside of tech, the U.S. market has become so tech heavy, and that's a good thing, of course, but it's not as diversified as global investing.
The discussion emphasized the strong performance of the 2024 stock market, bolstered by sidelined cash and a pro-market administration, with optimism for 2025. In the AI space, Broadcom is emerging as a strong competitor to Nvidia, leveraging custom AI chips and networking solutions, while Nvidia remains dominant in GPUs. Experts highlighted the importance of global diversification, with companies like TSMC playing key roles in the AI ecosystem. While AI stocks show potential, concerns about volatility suggest the need for balanced strategies. How can Broadcom's custom AI chip strategy impact its competition with Nvidia? What steps can investors take to manage AI stock volatility while diversifying globally?